Hi, my name is Andre Oliveira, and I want to welcome everyone to my PowerPoint presentation about the Chapter 5 discussion. We're going to be talking about the freight on board destination and freight on board shipping. To make my life a little bit easier, I'm going to use FOB for short. We're going to talk about its history, the costs, the terms to be used, and how ownership works when it stops the seller to be the owner, and the buyer will take when they will take full responsibility for it. I will also show the journal entries for both freight on board destination and freight on board shipping from the view side of the buyers and the sellers as well. I would also be giving examples of freight on board destination and freight on board shipping. So what is freight on board shipping? In FOB shipping, the seller's liability ends when the merchandise is on board of the ship. The goods change ownership when the seller delivers the goods to the ship. So it is safe to say that the responsibility of the sellers is just to make sure that the merchandise reaches the ship. So in the shipping dock, the seller stops being the owner of the merchandise, and also the responsibility ends there. In freight on board destination, in this case, the seller is responsible for the transportation, and if something happens, they are still liable. The ownership of the goods might pass to the buyer as soon as the buyer receives those goods. So only when the buyer receives the goods on its property, it's when he becomes owner of that specific merchandise. I'm going to use this image to better explain FOB shipping and FOB destination. As we can see on this image on the left, this shipping dock, that's when the seller's responsibility ends. So from here on, it's the buyer's responsibility and ownership. On the right, we can see here the buyer. Let's assume that this shipping dock, it's a facility owned by the buyer. Only when the merchandise reaches his facility, that's when he becomes the owner of that merchandise. As we can see here on the bottom, the sale is only done when it arrives, and with FOB shipping, the sale is done as soon as it's shipped. So the term FOB has its origin since the days of sailing ships, when its merchandise would change ownership as soon as they will be passed over the rail. We can see here there's this cargo being lifted. We can see here the ship. As soon as that cargo hits the land and crosses over this rail, it changes ownership. That's how they used to do it. That's why the term freight on board. So these are the terms that are used um, for a freight on board. To make it a little bit better or a little bit easier to understand, I'm going to draw here an S and a B. S as in seller and B as in buyer. So first we have the FOB shipping, freight prepaid. That means that the seller will pay the shipping costs, and the receiver of the goods, which in this case is the buyer, would only take responsibility when he receives the merchandise. On FOB shipping freight collect, the buyer will take full responsibility of the shipping, not only paying for the costs but also being liable for it. So in this case, the seller's responsibility stops at the shipping deck. On FOB shipping, freight prepaid and chargeback, the seller does not pay the cost of shipping. Instead, when they send the invoice to the buyer, they will add the shipping costs to the invoice. So therefore, the buyer will receive an invoice not only with the cost of the merchandise, but also with the shipping costs. The buyer will only take ownership of those goods when he receives them. So on FOB destination freight prepaid is the same as shipping freight prepaid, where the seller pays for the shipping costs until the it reaches the buyer's store or facility. On FOB destination freight collect, the buyer will pay the freight costs until the delivery of those goods. But the buyer will not take ownership or liability until the cargo is under his possession. So he pays for it, but does not take full responsibility for it. On FOB destination freight prepaid and charged back, the seller will take responsibility for the freight until the delivery of the goods, and then the buyer will deduct the charges from the invoice. The original invoice will include the freight charges initially paid by the seller. And last but not least, we have the FOB destination, freight collect and allowed. That's when the seller will add the freight costs to the invoice once again, and the buyer will have to pay the charges. The seller will assume the responsibility for the cargo until it's delivered to the buyer. Now we're going to see how a journal entry will look for FOB shipping. We're going to see it first to the buyers and then to the seller's side. So on the buyer's side, we will debiting not only the purchase account, but also the freight account. And then we shall be crediting the accounts payable and the cash account. We're going to be crediting both of those. On the seller side, we're going to be debiting the accounts receivable or cash account, and we're going to be crediting the sales revenue account, as we can see here. For FOB destination, on the buyer side, because the buyer is not responsible for the goods until it reaches his facility, we can make the journal entry for the purchase transaction under the periodic inventory system. So what it means is we can put the purchase account under debit, and then the accounts payable and cash account, we're going to credit those. The seller side will be the same as the last slide, where we're going to be debiting the accounts receivable or cash account, and we're going to crediting the sales revenue account. So now we're going to talk about a real life example of a FOB destination. Whenever someone is buying something from Amazon, the company, which is the seller, which in this case will be Amazon, is responsible for delivering your product as close to you as possible. As most of you must have already ordered stuff from Amazon, you know that you order the product, and it's only when you receive the product at your home, your office, that's when you become owner of that product. In the meanwhile, transportation, that's all responsibility of Amazon. FOB shipping, a real life example. If you sell items on eBay or Etsy and a buyer that is overseas wants to order one of your products, it will be in your best interest to have the buyer be responsible for the product as soon as it leaves the loading dock. So in this case, you'll be the seller. Let's assume you want to sell this to another country, and to avoid being liable for in case something happens during the transportation or during shipping, it's better if you try that the buyer will be responsible for it. Therefore, I want to thank everyone for assisting my presentation. Once again, my name is Andre Oliveira. I'm taking business management, and thank you so much and have a great rest of your weekend. Thank you so much. Goodbye.